Alright, guys, I think I am on. And let me put up some chat box over here, just in case anyone want to chime in. Why is it not working to me? My internet's been acting up, you guys. I have no idea what's going on sometimes. Okay, one second. Boom. Alright. We are in business. Dun, dun, dun. Okay, it's the weekend. Obviously, it's the best time to talk about GameStop. What else should we do besides talking about GameStop? Hmm, you know, most of us don't have anything to do. When I say most of us, I mean me. Hold on, you guys. Let me just adjust this real quick. Hopefully, no one is getting cut off. Okay, good. Let's go, you guys. Okay, let's go. Okay, so today it's gonna be a long reaction video. I feel like, I haven't done one of these in a while. Just kind of like listen to the media and see what they're talking and how much crap they're giving GameStop. Actually, this is it's an indicator for me to buy more anytime I see people in the media talking about GameStop. It just makes me laugh sometimes, but once in a while you get a breath of fresh air and you see these video popping up. But I have a little bit of a different perspective. A perspective. What the heck kind of phrasing is that? Okay, sorry. I'm just trying to get the video set up. So let's begin here. I'm gonna do a timestamp here because, like, all of this flustering about, it's kind of wasting. I don't want to waste you guys' time. So I know most of you listen to my live later. So yeah, let's just do a timestamp right now. Okay, so let's begin. I know GameStop ended its trading day at 27.99. Shocker, right? Max Payne was like 28. And again, there's a lot of shenanigans that happens in the last hour of trading, right? One of the things that I was looking at is that, but look at this. What is this? Oh my goodness. Again, like if you see things like this is after hours, but it's just indicative of what they're doing in order to short GameStop, right? Now, again, this is a different indicator, but let me use a different indicator, huh? But that's curious, right? So this one is a smart money something something. Um, anyway, I'll explain later on. I don't like this indicator too much, but I like this indicator better. It's called a smart money index. Again, not an expert on it or anything like that. I'm just trying to see what I could kind of get out of it. These indicators, obviously, take it with a grain of salt. Usually it's a lagging indicator anyway, so you would kind of never catch anything in a sense. But unless you learn how to kind of moving forward, detect early trends, and all that stuff. But for me, it's just for fun, right? Just for fun to see what these type of indicator give us on GameStop. So I'm just trying to string. Look at this. It's not even giving me. Sorry, you guys. Look at this. Terrible. Terrible. Okay, so why is it not giving me not. That's not, you guys. Man. Okay, let me go here. Maybe this would give me something. Okay, so it's too small. There we go. Now we're seeing something here. All right. So we're just playing around with these indicator, and I just noticed something odd about this indicator. Again, take it with a grain of salt. I don't know anything about this one, but this is called Smart Money Index, right? Again, to me, when people are telling you um, retail move markets, it makes you question, right? Make me question. Is that true? Let me try to find something something out about this company, and why is it being traded so like bad in a sense, right? Again, price action wise, I'm not saying about the company, but we'll talk about the company later on in a bit here. I'm just trying to kill time just in case anyone want to join in live. But anyway, so let's think about this real quick. So this is the beginning of the squeeze, or quote unquote the squeeze. For the intensive purposes at the moment, you could see that. But you could see that the green line, I'm just extrapolating this, okay, based on the observation that I see. Green is indicative of smart money buying in, okay? Uh, and it seems like on average, see, smart money was buying up here, all the way up there, right? Again, just extrapolating this, and then they dump on the top right there. So, and if you want to see another indicator that I saw as well, that kind of give a stamp, is it smart money price action concept? I think that's the one. Let's try that. Here we go. So it seems like it gives you a rundown of how. Look at this. So back here, smart money was accumulating to the tune of hundreds of millions of shares. Okay, and this is why you see that spike. Okay, now let's look at the top. See if it gives you the indicator of them selling. Okay, when did they sell? Even smart money didn't sell here. I don't see. Right? Yes, some retail probably freak out and then sold. Right? But guess what? Smart money didn't sell until this time frame. Again, if anyone knows how to read this indicator, please correct me if I'm wrong. Okay? Again, we just playing around trading view here and kind of notice something like this. And I'm thinking, okay, so they didn't even start to sell until over here. Right? So what is this? Are this all retail, causing the price to go like crazy, right? Again, people betting up, betting down, and all that stuff, ebbs and flow of the markets. Nothing new here. But you know what I've noticed something though? If you were to add this up, again, this doesn't work perfectly, but I'm thinking when they were buying, there's a lot more shares. Okay, a lot more shares. If you add these together, that's around what? Let's just do math right here. Let's pull in the calculator. 195 plus, let's not round up, 72. So it's 267. Okay, let's write that down. 267 million buys. Okay, 267 million. So let's add these two together. Sell order is less, right? I mean, noticeably less. And again, I think this is indicative of smart money. Yes, they took profit, but they still have a lot more shares to go. Right? So the difference of what? Close to half. Still, slushing around somewhere here. Okay, so that's just one thing. And then look, when L did they buy? At what point did they buy again? Right here. But again, less. I mean, 15 million shares, 5%. It's not too much, right? But the point is, they were adding here, here. Okay. And this is a perfect time for people to accumulate too, right? Whether it's institution or whatever, right? Anytime institution wants to accumulate something, you could see silence, okay, in the media. They don't even want to talk about it. And if they do, they would come up with segment like I'm gonna react to in a minute here. But it's curious, right? I mean, I don't know. Again, this indicator might tell you guys something else, but to me, I feel like it gives you a clear level in which smart money would start to buy into this thing. Now they haven't add too much. Again, this is a weekly candle, so maybe if I do daily, you could see a little bit. Okay, there you go, a little bit more breakdown of which level, and it seems like they add 3% here too. Smart money, sorry. And it seems like up here, smart money was selling to the tune of how much? Look at this. Right here, just recently, back in June. I know, like, when you say that people are shorting this company to oblivion, you could see why, right? You could see why. Again, this is smart money. Not quite sure how to interpret that, honestly, because again, over here, maybe that's the imbalance of the whole on balance volume. Perhaps you could combine the two. But yeah, again, I might be wrong in interpreting this. And again, indicative of this right here, the same. So you could see a drop in smart money index right here. But they were buying up here too. But yet you don't see these type of things in a regular stock. If you look up Nvidia, for example, let's see, you could see the opposite way, right? It goes up. But it always, and again, this is a daily, it always come back to zero, zero it up. But for GameStop, for some reason, you get this negative. And negative to the negative, it's not even like back to equilibrium. So again, I don't know, you guys. This is comical to me. So this is why I'm thinking, there's something afoot here. But really, doesn't matter. This is just the price action here. Nothing to do with the company at all. As we all know, the big guys out there, they are employing a team of psychologists, okay, to, make you feel all sorts of way. Anytime you see a tick up, a tick down, a tick, whatever, they want to incite those excitement or fear or whatever in order to make you make the decision about your investment. So the smartest thing to do is to know what you're investing in and to always be vigilant in terms of buying the dip. Now, I'm seeing crypto crashing right now, which is usually for me, that's the opportunity to buy. But again, I am kind of waiting a little bit here to see if it's dipping down even further. Usually, when crypto dip, you want to buy the dip, in my opinion. Again, just my strategy here. I'm not trying to tell anyone to do that. Again, so let's get back to GameStop here. Let's see. Sorry about that. Sorry. Okay, so let's get to the meat and potato of this show. I'm gonna put a timestamp on this one too, so you guys could skip if you want to. Now, I see this particular post here, and again, this is a breath of fresh air, right? But I really, with Charles Payne, I know he's, talking the talk about retail and all that stuff, but then I don't understand why he was pushing AMC to the masses, because anytime you talk about GME, they always, put AMC, and I think Charles Payne here is the person that cover the whole, meme stock thing and all that stuff, and kind of push AMC in front of people more so than GME. And now this narrative kind of pops up, and I want to address that. Hi, because I can. Thank you so much for joining. Hope you're doing well this weekend. But anyway, so let's listen into this one, and I'm sure you probably see this video a million times. So let's go.
I'm going to ask you about two stocks. I know you like GameStop, you like Tesla and SMR. GameStop, love to hear that. Where do you think GameStop is going?
Well, the first stop will be 50. The second stop will be 100 plus. This is financial engineering. Get used to this theme. This is one of the themes of this bull market. It's just getting started. Ryan Cohen, the CEO of GameStop, has this figured out. And we think that if they announce a similar strategy to what Michael Saylor is doing at MSTR, look out above.
Well, I'm glad you said that, because I still have all of my GameStop, and I could have taken some major profits on that. I'm going to ask you about two.
But anyway, so he's talking about the same strategy as Michael's strategy, with Bitcoins and all that stuff. And this narrative has been pushed quite a bit, and I feel like it's a bit overdone, and it's not. Now, this is just my opinion. Obviously, I'm not knocking if Brian Cohen were to buy GameStop. Brian Cohen were to buy into BTC. I'm coming from that world too. Great on you, right? Great on him if he does that. But I think that this narrative has been pushed, perhaps to, if Brian Cohen doesn't make that choice, people are gonna be mad at him, shareholder or anyone who, kind of hating on GameStop. It's just giving them another idea to hate on Brian Cohen, if he doesn't do that. And again, just be careful again when they push this type of narrative, just like Moran's was saying, like if they push it in front of you, just be cautious on that. And perhaps, in my opinion, again, just my opinion, Ryan Cohen is a very conservative CEO. We've seen that many, many years. He doesn't want to spend money where it's not, doesn't need it. And he's not going to risk his capital, our capital, if you are a shareholder, to do something that is so risky to the point where, you are taking 5 steps back, if it doesn't, come to fruition. We all know how volatile, BTC is. It could go up 20% and then down 50 in one day. And so again, yes, the asset class is becoming more and more mainstream. And so, it's natural that people would want Ryan Cohen to do those type of things, but just be careful. If you see an announcement that is not investing into BTC, don't be surprised that the price is going to come down. And again, psychology, right? Psychologically, they're going to try to push this price down. Let's say, next earning, you see, hold on, let me see. Next earnings report, it would be the best earning report, right? We beat top line revenue, we beat twice, whatever. I'm sure we're gonna beat this time, double beat. I have no doubt that we could shoot for the star here. But again, let's just say we have a stellar report. We're gonna make 500 times in what is being estimated here. Like really 8 cents. They're estimating that we're gonna make 8 cents. Even though we did 6 cents last quarter. Come on, like it's ludicrous to say that. that the GME will only do 8 cents. And compared to last year, even when we were like missing, look, 22 cents. Okay, so we could beat that for sure. Well, I can't say for sure, but my point is like I have high confidence that we're gonna beat that. And then, so when we're gonna do well on the next earning report, what would be the narrative? Oh, look, he doesn't even buy into, BTC. Excuse me. It's like, and then they're just like smacking the price down anyway. It's like down 20%. Why? Because Ryan Cohen didn't buy BTC. What a lame CEO, right? So again, I think that's the narrative that is coming. But again, as an investor, if let's say they post a great earnings and it doesn't do this thing, but instead it does this 20% down, guess what? Best opportunity again to scoop up even more if you are here for the long term. Again, the whole squeeze narrative, I think it's going to be a multi-year. I've always believed this. I'm not saying it won't mow ass or anything like that, but if you want that type of egregious move to the upside, we have to catch up on the fundamental side too. The reason why they're stalling is because they are hoping that GME would fall down in some way, that they don't have to cover the share that they have been sold to us, right? Again, I know even with the shorted shares right now, I was looking at it, and it's lower. As I said many times, the amount of short interest is lower for a certain reason, for whatever reason, I don't know. But I'm just thinking that this is bullish. Bullish, why? Because nobody is willing to short this thing. And when there is no amount of shorters who, like, let's say they're gone and there'll be zero short interest left, that's when we're going to the moon. Right? Because again, there's no artificial, quote unquote, artificial drawdown on anything like that. And I'm sure algorithm would be looking for companies like this. Again, algorithm that was not looking into GameStop originally would pile in, because now GameStop has zero short interest. Again, there's so many good things come for this company, and I don't understand why people are blind to that in a sense, right? Maybe I'm just way too much optimistic about this company, so I'm biased in that sense. I invest in this company, so just tame your expectation here. When I talk about GameStop, obviously this is the things that you have to kind of be careful. There's people very negative about this company, and then there are people very enthusiastic about this company. So just take the information, and then hopefully you could decide whether you want to add this company to your portfolio or not. I'm not quite sure why this says 27.98 when if I look at Trading View, it's 27.99. There was somebody was talking about a tactic that they were using to slam the price down. Banging to close or something like that. Again, it's a tactic that market maker use to, draw the price down to the max pain, force it down. Like, it's not even, let me see if I could find it. But yeah, I mean, people look at it and, oh, right here. So again, tactic, in order to do what? So that those options that was written on either January call is not going to be in the money, and incite more enthusiastic about people trying to trade those contracts. Again, those contracts are very juicy when it is a high IV environment, but it's bad for option buyers in that case. So again, that's why you want to wait until the implied volatility is low, like 50% or less. Even 50% for many other companies is still high. So again, that's why learn how to how different types of market participants are doing, are looking at, and all that stuff. It's really good for investors as well. It's like Rowan Kitty was saying in his segment on how he chooses investment, right? Sometimes just being the most fundamental guy doesn't work either. You see, company has great fundamental, right? Like GME, for example, right now. And, you see the price not really, keeping up with the fundamental for some reason or another, perhaps because of the technical analysis type of people who are like, hey, this is overbought. So let's just, there's not many people are buying in. Nobody wants to step in and buy, and stuff like that. Whatever they're seeing with their indicator, they are going to trade accordingly. So these are technical people. And so if you know that, you could, time the bottom, so to speak. And this is why I think, he came back here. Now, one of the video that I see that he talked about how when he was tracking GameStop, how was he, how did GameStop come to his, view site or whatever? And he was just explaining that sometimes you just track it for years, 5 years or whatever, just tracking it and not even taking any position, but waiting for the right time to get into it. And I'm sure, and he never said that he doesn't sell GameStop either. He must have sold some up here. And again, remember he was saying, he doesn't typically hold his position more than 3 or 5 years. Okay, typically, again, proof. So don't shoot me. I'm just saying. Those videos just give me a little bit of a perspective here to say that, hey, he knows when to trade, when to come in, when to come out, or when to get into the stock. And I think this particular price movement here gives him the utmost confidence to buy into it again. Okay, the call options, the whatever that he had in his arsenal. And we saw it. We saw it in his YOLO update, how many shares he had, how many call option he had. He was very confident that it's going to go higher. Sorry, I long drawn out explanation here. Where was I at? I think I was talking about, the trading thing here. Psychological manipulation in order to get you to do something. Okay, so be careful. And it seems like they're planting the seed of, if Ryan Cohen doesn't buy into BTC, it's not a good play. GME is a terrible company. Ryan Cohen doesn't do anything. Look, he doesn't even want to buy into BTC, right? Even though he's been like working for free, right? Working, his ass off in order to make this company the best company, long term, for a long term business venture over here. So let's take a look at this video here. I have not listened to it to its entirety, so I will jump in a minute here. Okay, so listen. Hold on one second. What is happening to my microphone here? Okay, let's start.
And we're talking all about GameStop GameStop and meme stocks and the trades that come along with it. Maybe some excitement, but maybe some woes at the same time. Dave Mazza is with us, CEO at Round Hill Investments, and David Trainer, CEO at New Constructs. Thank you both for being here. David Trainer, some of your thoughts here. The big picture, I mean, right now, GameStop's up about 9%. Some of your thoughts on the quarter?
Look, it's good to see GameStop actually, produce a little bit of show some life on the top line, but we're still seeing negative margins from this business when you adjust out for all the unusual items. There's a tremendous amount of debt overhang. We continue to believe the stock has a bigger chance of going to zero than it does of maintaining its current performance.
Sorry, guys, I'm eating. But did you hear this guy saying that GameStop has tremendous debt? What? Oh my God, so comical. And how is this guy deserve to be where he's at right now in this TV? Charles Schwab, whatever this. Oh my God. Terrible. But anyway, let's go.
So it has a better chance of going to zero than maintaining its current performance. I mean, it has gone from $10 to $30, right, this year from April till now. I mean, you had a few real spikes, but what are your thoughts here as you take a look, Dave?
Well, it's interesting. We think of these meme stocks as really meme stocks, and they're fun to trade. But at the end of the day, they're companies and they're businesses. And in the case of GameStop, we're not seeing a lot of transformation that we've talked about, right? And so we have revenues down 20% year over year. That's in the back of being down 9% the quarter 1 year ago. So we're not seeing a lot of momentum in the underlying business. Now, with that being said, they have been able to raise a significant amount of capital. They've raised equity. They did come out and said that they weren't raising again, which is probably a boost for the stock. But until we actually really see, I think, some momentum in the underlying business, it's going to be hard to see GME kind of continue to rally consistently.
Yeah, and we think about meme stocks, and this really started in 2021. There was a lot of excitement, and people were doing this. You're actually saying that you think that even Roaring Kitty has less influence now than he used to. I want to hear both your thoughts on this. We think about the tendies, right, like chicken tenders, or what the profits that people got on just on September 6th. We saw a post, and I saw there was one options trade that made $550,000. One trade. Pretty exciting. I mean, wouldn't you love to make that? But it's very risky. You think, Dave Mazza, that you don't think he has the same movement after his posts?
Yeah, so we actually did a study, and we looked at every time he's posted on, at least on Twitter or now X, to see the impact on the stock.
Right.
And what we've seen is that most recently, basically the performance on those days on the upside has been more muted. So we've seen days where upside was 70%, 60%. More recently, it's been 5, 6. So he certainly plays a role still, because those folks that are chasing the tendies, as you say, are still believe in the Roaring Kitty phenomenon, but its impact on the name has lessened, I think, as these meme traders has moved on to other memes or other stocks in general.
It's a lot of fun for the folks that are fully involved. They want something to go to the moon, right? Whether you have diamond hands or paper hands, right? Are you going to hold on to it? But some of these other names that have come into play, I mean, you could put the DJT maybe in there, AMC, BlackBerry, Netflix, Palantir, Coinbase, SoFi. I don't know if you think those are all, David Trainer, names that are meme stocks, but they have been referred to as such in articles. I mean, as far as GameStop, you make the point here that you think it's probably more likely to go to zero than go anywhere else. They are not transforming to digital. They're certainly not selling games, right? Hard gameware. They're trying to do cards, trading cards, and made a deal recently with a collections kind of company, sports collectors company. But are they really redefining themselves? I mean, Netflix used to send us a video, but Netflix redefined itself. It became a streaming behemoth.
Oh my God, they're trying to minimize PSA, and they don't even know what PSA is. I don't know, maybe they do, but they're trying to minimize it. And that's why I was laughing. It's like, they're grasping at a straw right now as we speak. And again, just muddle the water. Oh my God, just throw all those memes, meme stock, AMC, DJT, or whatever, whatever stocks that you hear associated with this company. But again, These type of network, and this woman here has been, very bearish. And again, that's the reason why she got a job there. It's called a what is it? Manufacturing consent, right? If she have a different opinion about GameStop, I bet you anything she would either kept it to herself, not gonna say in public, either way. Or if she were to come out and say, you know what, I think GameStop is actually a good company, she would get fired immediately. This is how the world of media works. And this is just how it is, right? Even in politics too. Way back when Bernie Sanders was running, the establishment, Democrats, I know it's a totally different topic than the stock market here. But I see the similarity there. And this is why I'm spot on in the sense that these people are lying through their teeth about GameStop. And we know this for what, 4 or 5 years already, right? And again, these are the poop and scooper. In behind closed doors, they are buying GameStop in droves, okay? Don't get them confused. This is the strategy. They tell the media to come out here, pee poo poo it. Meanwhile, they are buying it. Okay, just like Bitcoin at the time, right? When it was $18,000, nobody wants you to buy it. The media doesn't come out here. Oh, hey, this might be the best time to buy. In fact, they were scaring you to death about Bitcoins going to zero. The same tactic here. Same. So, understand the tactic, do the opposite, you'll be fine. Yes, you're going to see some red in your portfolio for a couple of days, couple of weeks, maybe a couple of years. But eventually, if you do it like what Moran's was doing, which is buying consistently every single day, every single week, or whatever money that you are able to accumulate. And this is how I did it back when I went into crypto, $5 here and there, $7 here and there, and just stash it away. And then eventually you just wait long enough, people are going to catch up to it. But the same thing's going to happen to GME. And on top of that, you have the CEO who is gung-ho at working his ass off for shareholder. And I don't understand why people completely miss that whole concept, because the media is trying to get you to think about meme stock. Oh, look, they run this much. Oh, look, distraction. So don't even listen to them, but I'm just doing this for fun, for myself, okay? Maybe I just like to torture myself here.
No, I like what Dave had to say about the lack of the transformation needed to justify the valuation. And I do think that this meme stock story is losing its luster. And I think there are other more exciting meme stocks. I mean, you can even make a case.
See, there's no more exciting company to put your money or lose your money into. Look, AMC is about to do something or whatever. Or DJT or SoFi, which is, I missed out on that one. Shame on me, but it's okay. It is what it is. You just focus on one thing and then there you go. I'm not mad that I, didn't invest in SoFi. I was waiting for $4. I was waiting for $5. It never comes. So it went from 6 to what it is today. But it would have been, double, whatever, right? If I would have put into that. But again, I didn't focus on SoFi at the time, so I missed out on it. But I'm not going to miss out on GME. What are you talking about? GME is always going to be in my portfolio for the end of time, till the end of time. And so, yes, they're trying to get you to be bored. And this is the best time to buy. I'm telling you, anytime the media is boring, they're trying to, steer you away from buying into this thing. Best time to buy. Yes, it might drop down a little bit more, to try to shake more people out. Again, I guarantee you, no, I shouldn't say that. But I know what I'm going to do for this, year. I mean, 2025, I think it's going to be the best year for GameStop. And yeah, crypto too. I'm sure they're gonna pump crypto to people. And again, in the meantime, because of this narrative about Bitcoin and all that stuff, that Ryan Cohen should adopt the same strategy as a MicroStrategy. It's gonna be another thing to kind of mislead people. One more thing to come after Ryan Cohen if he doesn't do that, right? So just be careful on that one. Let's go back to the video. Hold on, not this one.
In some ways, the way we've seen Berkshire Hathaway and some of these Mag 7 stocks move, that they're the new meme stocks. And the advantage that the new meme stocks have over the old meme stocks is that these new meme stocks actually have businesses. And I think the sort of traditional meme stock investor has gotten smarter. You know, if I'm going to gamble on a stock, I might as well gamble on one like Nvidia. Yeah, it's super expensive, but it makes money. When you're looking at something like GameStop or AMC or some of these original meme stocks, they don't make any money. The risk is much higher. And so I think investors have gotten smarter and said, look, I'm just going to be out there gambling and playing with my money, as meme stocks and meme stock investors are likely to do, then at least they can put it into a real business. But with GameStop, it's not really a real business. And to Dave's point, to your point, Nicole, they're struggling to find a way to get some footing, to make some real money. But the bottom line is, I don't think they will, because the space they're in just doesn't really have anywhere close to the cash flow opportunity needed to justify the stock price.
Okay, well, it's remain to be seen, sir. I appreciate your opinion, and you're trying to steer people to do what? Putting money into Nvidia, while Nvidia is doing what now? I think it dropped down. It's like 5% or something like that. Well, let's look at it. I laugh myself all the time, like, when I listen to these people. Let's see. I feel like these people have no shame, no shame whatsoever. So you see, there's a weakness here, right? If you were, let's see. Oh, let's look at that indicator that I just have. Smart money. I think it was the price action, right? Oh, oscillator. Okay, so you see this is called bearish trend. Okay. So this is a daily. You could see sign of weaknesses, signs of weakness. Okay. Let's compare that to GameStop real quick. I know GameStop is manipulated, so it's hard to kind of compare the two. Well, we have the opposite. Okay. Bullish. Let me do the 4 hours. See, even this one is more bullish too. Change of character, yes, that's just how the terminology is. But yeah, we've been uptrending, a lot more greens than red. About the hourly. Okay, hourly still. Let's do the monthly. How about that? Doesn't register. Okay, let's do this one. So yes, there's been bullish trends. Price has always been down here. Imagine if we break through to the midline and then through to the upside. You could see that here too, right? So I'm thinking we are somewhere here in terms of this indicator, right? Again, it's not a knock or anything, but I'm just saying that they might be doing this to us for another year, you guys. I'm telling you, Again, these people have the ability to manipulate people either way. But for the people that couldn't wait, yeah, go ahead. Put your money elsewhere for now. If you wanted to do that, do your thing. But when they're ready to send this to the moon, yeah, they're going to you can't catch it. You cannot catch it. So again, they're collecting premiums right now. Market maker, are the ones that gives you those buy or selling you those call options, whether it's naked or not. I can't prove that. My point is that they're trying to entice you to buy call option rather than shares, because they need the shares to settle their trade, real share, not just some synthetic shares that they have call options in the money call option, so to speak, long dated one, hoping that you would eventually sell the share, real share to them. So again, just me thinking about the market structure here in terms of price action, not anything about the company. But again, they're trying to tell you that the company doesn't have any real, okay, which is a credible threat for them. If GME were to be in a real business, right? That's what they're scared of, and that's why they're telling you, like flat on your face. In front of you, right now. They're scared that GME actually have a real business, and they are actually scared of PSA trading card, because that's why they try to minimize that business arms of things. Okay, it's nothing to scoff at here. Even PSA Nat Turner, the guy who just joined the board. We've talked about it. Moran's talked about it. He is a real deal. Okay, came in here, not even taking any compensation, right? Because perhaps he's believing in the business model. Even impressed with Ryan Cohen, with the team, right? Saying how fast it went. And I was thinking about that, honestly. I was thinking, okay, if they could do this with PSA card and kind of pivot so quickly to the point where the people that are in the business was impressed and how much they know, even though they're not even into the card collecting world, right? Larry Chain is the biggest, a collector. He said it in his live stream. So of course he knows something about that, and I'm sure there's a lot of influence in that as well. So there's a lot of good businessmen in the GME board of director that they are doing this for the real impact for the business in the future. Yes, you might not see this big impact yet because you have not seen a mass adoption of anything quite yet. You haven't seen what GME does, and this guy is already, try to put obstacle into that. And again, being very pessimistic in public, but in reality, they're probably scared of that, and they're buying right now. I bet you anything, they're buying GME like crazy. They just have not told you yet until it's too late for you already. The same way, like I said, draw a correlation between Bitcoin when it was at 13,000. Did any of these guys came out and say you should put your money there? No. But no, guess what? Where they want you to put your money? Oh, if you want to gamble, put money here. Nvidia? Nvidia, sir. Come on. Are you kidding me? Yes, it's expensive now, but if you want to lose money here. You see that? If you want to make money, don't put it in GME. Put it in money losing stock over here instead. Which just so happened to be, what I bought down here. I'm sure these people bought it down here. Oh my God. Again, very telling, right? You have to be smart. You have to be smart about this and understand that's what they're trying to do. You see this gap? There's no reason for, right? It's gonna feel someday. So it would be a scary drop if it comes down to that. There. Scary, man. Scary. How far is that gonna be? Oh my God. People are gonna be like, oh, that would never happen. Okay, well, hey. If the world is running to bond, by the way. Oh yeah, let's talk about bond market real quick because I haven't talked about that in a minute here. Let's finish up with this gentleman here. Couple more minutes. I know I'm kind of babbling here.
And you did have some other names that you do like if you're going to put your money to work. You said Target and Steel Dynamics and Interactive Brokers were names that you would actually like. Maybe just a quick thought, a few seconds on that. Dave Trainer.
Yeah, I mean, those businesses all make a lot of money. They've got cheap valuations. They're positioned intelligently. They've got a moat around their business, and so that's the kind of investing that we think makes sense at new constructs. We don't like to sort of gamble and invest based on hope. We like to understand the truth about the profitability. We understand valuation relative to that profitability, and when things line up, low expectations compared to cash flows, that's attractive. Low cash flows compared to expectations, that's unattractive. And we're old school. We believe in doing hard work to dig hard and find value. And the fancy, shiny meme stocks don't fall into that bucket.
Right.
Wait, hold on. What did he say about hard work? Let's listen in again.
We're old school. We believe in doing hard work to dig hard and find value. And the fancy, shiny meme.
What is Ryan Cohen trying to do for 4 years of this company? Hard work. It's not. He doesn't even talk to his shareholder because he doesn't want to hype anything about this company. Real value is here. But anyway, I'm just thinking, like, people are, how is this guy came in here and tried to like, real value, we believe in hard work, but at the same time, you want people to buy into NVIDIA? That's the a gain of like nobody business, right? Now, oh yeah, it's another thing too. Hold on, let me finish this. I will never finish this. Sorry, you guys.
Meme stocks don't fall into that bucket.
Right. And Dave Mazza, I mean, you don't think meme stocks are going away. Maybe they're just of less value, or they don't hold as much water, but they're not going away, are they?
Well, I don't think so at all. So I think Dave Trainer's point is a really interesting one, where now I think the meme stock traders have sort of matured, and they've moved up market into different names. Palantir is certainly a legitimate company, but it does trade like a meme. Tesla maybe is the original meme stock before we even dubbed the meme stocks as meme stocks, and we're seeing its behavior most recently post the election kind of go to the moon and meme, plus obviously the back-to-back years of incredible gains on NVIDIA. The point is that now traders have a lot of different options to be able to make either a long-term buck in the market, or even a quick buck like we saw folks flying into GME and AMC during the COVID times.
All right, Dave Mazza and David Trainer, thank you both. A good look at GameStop and the rest of the meme stocks today.
Meme stock today. Okay. Well, thank you for your well wish. I will stay here. Goodness. Okay, so I hope you enjoy that one. I definitely enjoy that segment because I laugh when these people are talking about, like, and then again calling it meme stock instead of meme. Wait, sorry, GameStop. Every single one of them is like GameStop. They don't even know the name of the company that they are talking about and trying to say they know a lot about this company. Oh, look. No wonder they're just talking about the surface level of this company and nothing about the deep dive, nothing about the analytics of the company, nothing about the market structure, nothing about anything that happened that matters, you know. What matters is you have a CEO that is gung-ho at freaking working his ass off. Like I said, he had an interview. He said, hey, if he ever become a CEO again, he might kill himself. Working very hard. I'm talking about working very hard. Because again, he is his worst enemy when it comes to work. He's a workaholic. And when you have this type of CEO, you do not want to bet against that. How can you bet against that? People are working hard, just like that gentleman was saying. Well, we're about hard working, but look, crazy. And then, oh my goodness, these people. But anyway, listen to this one again. Again, CNBC, same BS, but let me see. I haven't listened to this segment, so. This is 8 days ago, you guys.
Welcome back to Squawk Box. Shares of GameStop briefly halted for volatility yesterday. They jumped by as much as 14%. This after a cryptic post, we're going to show it to you, on X from Keith Gill, the trader known as, if you remember, Roaring Kitty. He posted a mock-up of a Time magazine cover, this time featuring a blank computer screen with a media player that resembles YouTube. It appears to be an edited version of the 2006 issue of Time, when the magazine named you, meaning all of us,
Was that
person of the year with the mirror.
The mirror, right?
That was the one with the mirror. Now, with the lack of context, traders made their own assumptions. Shares of Unity Software jumped, ticker U. So did the shares of Clear Security.
Yeah, I'm sure algorithm just search for those and then, try to pump it up and, oh, look, he's talking about this stock. BS. It's all BS.
Secure Inc., ticker YOU, before eventually all closing lower. Welcome to the world of, I don't know what.
Roaring Kitty.
Presented without comment. I don't know what the comment is supposed to be.
No.
It'd be great if you could do that. Is he allowed to buy a bunch of calls and then do that?
Yeah. Why not?
Yes, I'm sure.
Because our boss do it all the time.
Oh, you mean on those stocks? I don't know. Sure. Wouldn't
that be good to do that? Do you know what call, if you bought 100 calls?
But the question is, if you're the SEC, what would be your claim?
Right. He's not trading on insider information.
Right. That's why it's such a great thing for him.
Yeah, he's not trading on inside information like all of us do all the time. Like, that's what, look at these hosts. Like, oh my God. I'm sure they trade on inside information all the time. I can't prove that. So, allegedly, I'm just like, making things up here. So, don't take anything seriously. But I'm trying to point out something here, you guys. This media type, they do this all the time. Again, they don't address the real thing that makes, the markets more, I guess, fair, to the rest of us. Okay. Now, people, when it comes to, hold on, let me try to look at something here. Look at the amount of people, that lose a lot of money in other place, that they are pumping. It's not meme stock or anything. They don't care about that. Like, they want you to buy at the high and then sell at the low to them and then rinse and repeats. Right? It's like, they don't care. But the minute you make money off of them, look at their face, it's like, this is not investing, this is whatever. Anyway, I'm just speaking too much. But let's look at what is important here. I'm going to do a timestamp too, so you guys could, I know I keep saying that, but then I'm too lazy to do it. Sorry, you guys. You have to sit through this. But again, this is how I think out loud and, just having fun too. I do have to go in about an hour or so. So I have some time to kill. But let's go and look at this real quick, because here's the reason why they don't show the numbers. Because if you show the number, whatever they're saying about GME, it doesn't hold any water anymore, right? Again, the bottom line is that we make money, okay? We have positive net income. I don't care where they get the money from. That's what the bottom line is. That's what should be, talked about. How, okay, underlying business is losing money. How much are they losing? What are they talking about? Where underlying business losing money? And how much? Really? What? $7 million in the plus is losing money? This is trailing 12, you guys. Okay, let me see. Let me just look at the quarterly. Okay, see how much money are they losing. Okay, 24 million. What is this? Let me see. Okay, so let's add these together. Just take the 3 worst quarter over here. Let's just do that. Again, you have to evaluate the business. Oh, hi. Thank you. 100, thank you. Let me see. But look at this. So let's just add it up together. Take this bull crap away. The idea that Jimmy lose so much money, oh my God. They can't even do anything. Completely dismiss the fact that they are a cyclical business. Okay. Fourth quarter, they make more money. Okay, they make money. How much more? We'll have to see. Yes, come on. That's what earnings report is about. Okay, so they operationally in 3 quarters, they lose $100 million. 103. Let's say 105. Just to extend their loss. 105 in 3 quarters. What are they doing in fourth quarter? Sorry. Again, this is just operationally. It doesn't even account for anything. Okay. Doesn't even account for their interests. But again, those interest money that they don't ever count this. Okay, that's fine. Let's just not count it. How much are they losing? So if you want to take the 3 worst quarter, $100 million loss. Okay, so is that how you analyze a business? Just 3 quarters? And then just completely dismiss the 4th one? It's like, oh, why? Because they make money. That's not what we're talking about here. We're talking about only when they lose money. Really? Okay. And again, these people are on TV. It's crazy to me. Anyway. I'm getting fired up. Every time I talk about this, it's just like, and again, when I talk about it in my personal life to people who actually, kind of understand a little bit about the balance sheets, they still have the same narrative as it's like, well, what they lose money? It's like, okay, well, don't you want to kind of look forward and not backward? Yes, they lose money from what though? The trend is the other way. They're trending in the positive way. People are not looking at this. It might be another year, you guys. It might be another year, maybe 2. Okay, because again, recession is coming. Have you seen anything about the bond market lately? A signaling of what? Recession, huh? The Fed just lowered the rate, but somehow mortgage rate goes up. Why? Because they are preparing for something, okay? And all the billionaires out there, like Warren Buffett, are pulling money out of equity. Do you hear me? Listen, something is happening, okay? And I'm sure this is why Ryan Cohen's being conservative with his cash too. The company's cash. Why would you want to make a rational decision to jump in when everything is all-time high? Marketable security is fine. What's wrong with that? Goodness, people need to just chill. And he doesn't have to buy Bitcoin for GME to be anything. No. GME just have to do nothing. Do you understand that? They don't have to do anything to survive. Oh my goodness. This is, again, I said it before. GME has FU money. You know what that means? It means that you have so much money that you could just, chill. You don't have to do anything. And people will flock to you. You know why? Because look at this interest. In a year, this is just 1 year, $123 million. Just doing nothing. Nothing. You don't have to jump. You don't have to, do a gymnastic for people to invest in this company. And again, that's why he doesn't do earnings call. He doesn't need you to buy GameStop. Get that through your head. He is so comfortable He doesn't have to go advertise it to the world. Hey, you need to invest in GameStop. People just naturally go because they don't want to miss out on this, for the fun or whatever, right? And again, don't be mistaken that the big guys out there are scoffing at this. They're not scoffing at this, no. They are just pooping and scooping so that you, retail, get so antsy. It's like, look, there's a other shiny object out there. It's not here. Don't look at this company, please. Why? Because they don't want you to buy here. Okay? Guess what? They don't want you to buy here because it's the safest thing you could ever seen in a balance sheet. The safest thing that you could ever seen in a leadership that is gung-ho at growing slowly, methodically. 4 years, we've able to achieve this. Think about 4 years ago. What is this? We used to pay somebody interest. Okay? We used to pay. And at this junction, guess what all of those people are trying to tell you? Oh, Ryan Cohen should have expanded more store. Why are you cutting store? Why are you paying off debt? Why are you doing all this? Well, because he did this right here at this particular time. For this. Yes, it took 4 years to do it. But guess what? We did it. Well, they did it, okay? And so if you're blind to that, guess what? How much money do you think 4 more years of this company gonna bring you? It's a lot to think about. I get it. I mean, it's a leap, right? It's like, oh my God. Yeah. I mean, 4 years ago, these people are telling you that GME was going bankrupt, gonna go under. Yeah, I don't think you're gonna talk about GME at 4 years ago, 4 years after. You better sell now or you're gonna lose your money, lose everything you got, right? Meantime, you have right here net income. Look at this. Isn't that the biggest milestone that you've ever seen in your whole life? In a company turnaround? And they give them no credit. No credit. Now, don't get me wrong, they will flip the script so quick after they position themselves already in GME. They've been accumulating, they're going to accumulate more for years to come. And whoever is blind about this investment, about this company trajectory, is going to miss out. I'm not going to. I know what this company is. This is bigger than Bitcoin, in my opinion, okay? Because again, you have constant, business here that is doing something. Again, GME doesn't have to go to the moon, you guys, meaning the actual company. Like, it doesn't have to build any rocket. It doesn't have to go. They just have to sell a few things here and there. And if they can't sell trading card this quick, you think they can't pivot to sell anything else? Come on. Look at the big picture here, okay? Even Nat Turner is impressed. Think about that. Okay? So they could go to a different vendor or a different type of, again, just because he doesn't tell you what he's doing right now doesn't mean that he's not doing anything. Did anyone see PSA coming 2 years ago? No. Talk to anyone who talk about GameStop, including these people, that I just showed. They didn't. And still, now they're minimizing that. Like, oh, is that really a turnaround that we're looking for here? Really? For many years, they're saying, oh, they need to pivot. They need to pivot because, software sell is down. Look, they're not going digital. They're not doing this. They're not doing that. Now, when they have a new thing that, trading card, that is, have a real viable business here. They have service right now. and a business. Service is if you want your trading card to grade through PSA and do it quickly, and I'm sure you know the turnaround time for those cards to be graded is going to come down slowly, okay? And the best, highest quality that you could have, in a sense. Now, I'm not a collector, you know. I don't plan to be, but you know, hey, who knows? If I make it big one day, I'll just collect it. Who knows? Just out of boredom, right? But my point is, there are people who have those bug, okay? And it's a most popular thing to do in the collector world, in terms of Pokemon, in terms of any trading cards, sporting card, and all that stuff. So they would have a lifetime customer here who will keep coming back, or even vendor. I'm sure vendor who, like smaller stores who's trying to, you know, get their feet wet in the collector world and all that stuff. You know, they could technically come to GameStop and buy a whole bunch of case of a trading card. They sell it in case now, like wholesale. Not even small little thing here. Hundreds of dollars here per case. So they're making serious money, and I'm sure, again, well, I shouldn't say I'm sure, but if you see this incremental changes right here, small little incremental change, and you still not looking at this, you are missing out big time. But again, it's going to be multi-year here. Balance sheets. I know you've seen this a million times, but just in case somebody doesn't or couldn't look into this, whatever reason. Sorry, I'm just playing, guys. Okay, so Cash Pal, great. Look at the inventory. They're beefing it up, and I'm sure that for this quarter here, profit margin was down a little bit. If you look at, let me go back here real quick. This is, trailing 12. Okay, trailing 12. Yeah, so from 31 to just under 30. So that's a 1% down. But I think, again, if you look at the past last year, okay, 1, 2, 3, right here. From here to here, right? Is that quarter 3? Quarter 3 of last year, yep. From here to here, you could see there's a slight, you know, decrease of profit margin, but not by much, again, you know. But this time, it's a whole percentage. So why is that? Is that a terrible thing? 1 quarter, you guys, come on. 1 quarter, but this quarter is usually when they are beefing their inventory. Okay, so let's go back here. Let's see what's the difference here. So quarterly inventory, 800 last time. So they went from 500 to 800. Okay, so that's like close to $300 million right there. I'm trying to find this one here. Quarter 3 right there. So from here to here, what is that? 1 billion. So it seems like when they have $1 billion worth of inventory, you know, they don't, again, store is closing and all that stuff. And so they don't replenish more inventory, less store to put those inventory in. So the point is, let's see what the difference is there. Okay, $300 million. So a decrease of how much? It's the 3 million. So that's for 40 million less inventory. But I mean, the most impressive thought is that, you know, they were able to kind of scale out of that with this profit margin. You know, the profit margin right here. So we're in the 30s again. We're going to be in the 30s, you guys. So, sorry, I'm just looking at this. See, 4 whole percentage. So within a year, 4 whole percentage. If we play the game of them, telling us we're declining on the top line revenue, right? So why can't I play the same game on the gross profit margin? If we're trending 4% up, okay. So next year we would be at 34. Can I do that same trick? So, and again, when these people are saying, "Oh, profit margin is they're losing money left and right, and they're incredibly high in debt," like, where is the debt coming from, you guys? What the hell? So let's look at the debt real quick, because, like, again, people are not looking into this, and that's what they're hoping. Like, when they do this segment, they hope that you don't look into the balance sheet yourself. They just hope that that people would just listen to them and not doing anything, not going into the balance sheet themselves and look into it. Okay, what incredible debt are they talking about? Are they talking about the expenses in like buildings and stuff? Lease, okay. $100 million, that's not too bad. Look at this, long-term lease. Okay, 300, 400 million. Okay. Total liability, it's only 1.4. What is the shareholder equity? Ooh, that's too much. That's too much. That's some serious damage over here. Now, retaining earnings, of course, we're going to have to address this. Yes, I agree wholeheartedly. But we need to get back to this time frame right here, where our retain earnings gonna slowly creeping back up. Okay, so right now 22. Okay, retain earning was positive, but I think at around that time we were burning too much cash. Okay. Again, we're just trying new things here and there, NFT marketplace. People always say, "Oh, it's a failure." Wait until the regulation on crypto become more clear, become more concise, become more the law of the land. And we'll see. We'll see. I always think this. People need to chill. Okay. Blockchain is here to stay. I don't care if you like it or not. It seems like they're pushing the world that way. I mean, BlackRock is already in it. I'm sure they will, use that to maximize their profit as much as they can. But that doesn't mean that GameStop cannot position themselves in that space. They already did. So just wait. At least they have their feet wet in that arena already, and they understand. Perhaps they didn't understand as much. Now they have ammunition. Now they have the trading card. You think they're not going to integrate it? Huh? Collectible items, NFT, non-fungible token. What is the original purpose of the non-fungible token? It's for collectibles. Yeah, believe it. People, I don't know. I'm just over enthusiastic, even though people are like, "Oh, this company is boring." You want to buy when it's boring. I'm telling you. Don't be too hyped up on anything like Dogecoin or it's like, "Oh, look, I make a gazillions of dollars." I did make some, but I'm saying, those are short-lived. Okay, this is more stable, more, I know with the meme stock thing with Roaring Kitty, of course, his personality is way out there, right? But understand, you are investing in real company here. And again, this is why I look at the balance sheets, and then it just makes me more zen. Like, it's like, okay, you want me to buy more under 30? Be my guest. Drop it down to 10 again. We'll see. We'll see how many people would sell at 10. $10. Oh my God. Okay, you guys, I think I have to go. It's 12 o'clock. It's been fun. I hope I don't get, babble too much. But, yeah, let me end on this real quick. I saw, hold on. Forecast. Okay, let's take a look at this again. Let me end on this real quick. So once again, there is an estimate that quarterly revenue by March 2026, we're gonna see $2 billion in revenue increase. Okay, not quite sure what that means. So, but at the same time, you have this price projection. Okay, I don't know. Maybe the algorithm already factor in the recession that is coming. I don't know. So just be on the lookout for that price. Will I sell my original position right now just to wait for 8? Hell no. Why would I do that? But if I ever see 8, and this is less than the actual book value of the company, this would be the deal of a lifetime here. Just saying, if the S&P 500 come crashing down because of the bond markets doing some shenanigans right now, just be aware that that could happen, but don't be despaired because this company is solid. Guess what? They have marketable security, right? They have money to even buy at the bottom of the market. Yeah. And maybe because there's nothing else, no other companies like them, they might be buying their own shares too. Think about that. All right, mic drop. I will drop the mic here. So try to be cool. I don't know if I am, but thank you, DJ. JD, sorry. All right, I will let you go. I will see you when I see you. Price target is abysmal. What the heck is this? What kind of institution analyst to give you something like this? Terrible. But anyway, all right, just be on the lookout for that. Understand what you get yourself into. Just be careful. Okay, peace. Bye.